You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 23rd day of December 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. If you do that just once, what will happen going forward, you'll get an email right before the show starts each day. And we're on show number 1,600 and something, according to YouTube. Although we did the show 6 years previous to the YouTube era, where it was just audio or podcast. We started podcasting in 2005. Back in the day when you said the word podcast and people just gave you a blank stare. So we were an early adopter of the podcast format. Anyway, join the show from the link on the home page. You get an email every day, and the email is just to remind you the show's about to start, and it gives you a link in the email that you click. You're in like Flynn. You don't have to go through the whole registration process. It also gives you access to the chat box. We do stream live on YouTube during the show, but I find it challenging to juggle two separate chat boxes. So I don't typically monitor the YouTube chat box. I'm going to try today because we have a special guest coming on at 1 p.m. Eastern, top of the hour, 1 hour from now, or 52 minutes from now. Sean Moloney, who is a luminary in the world of all things cryptocurrency, and in particular, the G999 ecosystem, which is something we've been discussing quite a bit here of late. So, join the show using the link on the home page. You'll never have to register again. But on the days that you're out of your office, away from your desktop, just point any internet-connected browser to youtube.com/CFRN or go to cfrn.net/live. In both places, you'll find a live or real-time simulcast of the show as it unfolds. You just don't have access to the chat box, okay? All right, let's open with a word of prayer. Let me just say this up front. Michael, as you know, he has been ill over the last week or so. Started with COVID. COVID went away, pneumonia came. And he's headed back to the doctor again today. He's been a real trooper. He's managed to work through the majority of his illness because he had a goal. He wanted to reach 100,000 for the year in the live training room. He hit that goal, I think it was yesterday. But please keep Michael and his family in your prayers. His father-in-law had it, mother-in-law. I think he said yesterday Jada's starting to show symptoms, and he, as we speak, is on his way back to the doctor. He was running a fever this morning, and he wasn't able to complete the live training room, but Valerie, trooper that she is, stepped right in and did a fantastic job. So let's open with a word of prayer. Heavenly Father, we pray for Michael. We pray for anyone that is sick, this invisible deadly virus that is finding its way around the world into homes and lives. Father, we just pray for, by the power of your Holy Spirit, that all would be healed, that this thing would disappear as quickly as it came. May your goodness and love be present here among us today. We pray that you would bless our gathering, this broadcast, with unity, hope, and vision. We pray that you would build in us a deep respect for one another so that we may operate as you intended, one body, the body of Christ. God, we pray for hope. We pray that you would stir your hope within our hearts and renew our faith. And Lord, we pray for vision. May your vision fill our lives as we seek to reveal your love. And we ask this in Jesus' name. Amen. All right, happy Wednesday. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. As soon as I finish, Valerie's going to pop in and give you a rundown of what happened in the live training room. Recap of the recap. Got it. Currently now, here in the U.S., the Dow is up 218 points. The NASDAQ is up 5. The S&P 500 is up 19. And the Russell 2000 also up 19. The only mover and shaker in the bunch is the Russell. When the Russell's up 19 points, that's a gain of almost 1%. The S&P 500 is also up 19 points, but for the S&P, that's a gain of half of 1%. In the commodity basket, crude oil up $1.37, trading 48.39 last. That's a gain of almost 3%. Gold up $8.70, trading 18.79 last. Silver up 27 cents, trading 25.80 last. And for silver, that's a gain of just over 1%. In the Asian markets at the close, Nikkei posted a gain of 88 points. Shanghai rose 25. The Hang Seng gained 223. No movers, no shakers. And in the European markets at the close, the FTSE posted a gain of 42 points. The DAX rose 169, and the CAC was up 60. Now that's a gain on the DAX of 1.25% on the day. And on the CAC, we've got a gain of just over 1%. That gives us a green day in Asia, a green day in the UK, and so far, it's a big green Radio Wednesday here in the US of A. With that, if Valerie's ready, we'll go to her and get a recap of everything that happened in the live trading room this morning. She just sent me over the Logic 247 recap, so I'm going to get that formatted for my screen and posted. And Valerie, no rush, you just let me know whenever you're ready to take control. No rush. We are in week 125 of Logic 247. And as soon as I format this, I'm going to drag it up to the big screen so that you can see it as well. Logic. Okay, Valerie just grabbed the charts, so when I come back, I will go over those numbers with you. Valerie, I've got your charts.
Okay, good deal.
Drag them up to the big screen. Okay, all right. You are locked and loaded, ready to go.
All right. Boy, Michael had a rough time, but I'll tell you, he just shows how important it is that he wants to keep this unprecedented streak going. And he took 7 minutes and 3 trades to reach his daily goal of 162.50. It was his 213th day consecutively of getting the goal. So it's pretty amazing stuff for a good day, but considering the fact that he has pneumonia and obviously he's got maybe developing some type of secondary infection to that, I don't know, but we appreciate him coming in this morning. Charts were, he left up a note and charts were running, and I guess after about 20 minutes or so, I went ahead and started up and jumped in there. These charts I have up on the screen, left to right, gold, the euro, crude, and the ES. And my goal, when I have the opportunity to facilitate for Michael, is to use the same words, but kind of do things a little bit differently, in my style than he does, and take the time to answer the kinds of questions that I get from our traders. So my focus gets to be a little bit different than his. And I think, I know that our traders benefit from that. So this morning, the first opportunity here on gold was this textbook trade. So I'll go over our 5 steps and show just how this trade worked out. We didn't take it. I was going through, this is pretty much must have been about 10:30. This is where I had just come on, and I was going through previewing each of the markets for our traders before I actually started in to the trading. And so this was something that happened during that time, and I didn't have an opportunity to take it. But step 1 is to have a trend, and we did have a little bit of a trend here. Step 2 is for this blue and red line here. Here it's blue, the MA1 to cross over the green line, which is the BBC. So step 1 is the trend. Step 2 is a cross. Step 3 is for price to pull away. Step 4 is for price to pull back to the BBC. Then what we do is we go down here to the slingshot. This is the lower portion of our charts, and look for this type of separation where the green line is separated from and below the blue line. Okay, this is the red and blue line is the cycle. And so we're looking for the green line to be below the cycle. Then when we have this up close, that finishes the 5 steps, and we can take a trade to the long side. So the entry here would have been 77.4 if you were able to get on the close, or 77.5 if you knew this candle was going to close in real time at 1877.4, you would have put a buy stop at 1877.5 and been taken into the trade as it closed and moved in your direction. This trade had an opportunity to get your goal for the day. You could have taken the 10 ticks there if that's what you were looking to do. So this was a textbook trade. The MA1 was blue and climbing. The cycle here was blue, bounce off the BBC. That's textbook. Bert, our trader, our broker over at Daniels Trading calls that easy and obvious, and it is. I mean, that's a high probability opportunity. When I come back and started talking about the charts, I drew this trend line, but and I'm going to remove it now because we didn't need it. Once I drew that, I realized we had the bounce off the BBC here. And so there was an opportunity. We did take a trade a little bit later. In real time, the cycle was going down too steep, so there was no trade taken there. And then there was a short trade here. So again, step 1, we'd taken out these lows. We'd broken, taken out this what had been dynamic resistance in the past. Pulled away, we were pulling back. So I drew the trend line, and you can see here in the slingshot, the cycle, which is now red, is well below the green line in a bearish configuration. And so this down close below the trend line was an opportunity to be short, which we did, and were able to get six ticks out of that. There was an opportunity to get 10, but in this case, I was illustrating how Michael uses the black step line or the MA1 behind a price to stair step to trail his stop to get taken out of profit. And we exited that trade with 6 ticks of profit. There was a continuation trade here. That was a momentum trade that would have had an opportunity to lock in a couple of ticks of profit. Okay, so a momentum trade is one where the entry is below the MA1. And we had been looking at something else. So when I noticed this, after getting back to the gold chart, I marked that as a trade opportunity. Here, gold was starting to trend again to the downside. And so I drew the trend line to mark some pullback action, and never came to fruition. There was an opportunity here, albeit it was, again, everything, there wasn't a lot of follow through this morning. And this is what we've seen for the last couple of days with quadruple witching behind us and a big holiday week in front of us. We didn't get a lot of follow through. I didn't prejudge that. That was kind of my expectation. And that was one of the things we talked about, was not prejudging. So this was another opportunity. There was just a couple of small legs and a chance to be long here. We have a bullish separation and a nice opportunity to get 10 ticks, regardless if you were filled here at the close or if you were proactive and got in 1 tick higher. There was an opportunity to get your goal again here on gold. Quick little follow through trade here that would have been a break-even momentum trade. And then this was during the break. Once the Europeans close, we did end up with a little bit more free movement to the upside. Now we're broken that, and we're trading to the downside. So that's the recap on gold. There wasn't much in the way of opportunity to follow through again here on the euro. I must have a drawing object up there that's throwing things off. It did have a break even here on the euro. That was, looked like about just before the gold triggered on the other chart. So we were watching things here, and I did take this short trade and picked up a half dozen ticks on the euro, and we moved on, and I came back and we identified some continuation trades on the euro. So a couple of the traders, I think they said that they'd taken a couple of these trades, and this one ended up being a break even. I think James said he got a break even on that one. Trend changed. Again, there's not a lot of long trends or a lot of movement in one direction or the other. And a long opportunity here that did end up as a stop out. Another opportunity here that I did take that was a break even, and this little bit of action here during after the European markets closed. Crude today did a lot of sideways motion. Bert jumped in and talked a little bit about that during this time period and showed us how we can use our support and resistance dots as an additional visual clue to what the indicators are telling us about price action. Was it another trade when this one happened on the crude, and then this was an opportunity here on crude to have gotten your goal for the day. I did enter crude here at 48 and got 5 ticks there. That's when we entered the sideways consolidation or range bound trading, and here we broke out, and this was right at the close. I was talking about praying for Michael and identified this, but was not in this trade. But again, we have a trend. We have step 2. We have the cross. Price pulls away. Price pulls back toward the BBC. This time it didn't touch the BBC, but we have a close above the trend line, and then price moved in our direction. This was a momentum trade, so that is managed a little bit differently. We move our stop to break even as soon as possible, as soon as we get any profit in the trade, and we did have an opportunity to make some profit there. And this continued up a little bit through to the noon hour, and now during lunch it's pulling back a little bit. Dwayne came on, gave us kind of a breakdown on what was going on in the ES in the larger time frame. We was talking here. I had a nice winning trade here on the ES. I guess this is where, what time is this? 10:36. So this is where so gold was having a trade the same time here, and I just take the one trade at a time in the training room most days when I have an opportunity. Got in here at 92.25 and out here at 93.50. So 6 ticks there. This was the alert that Dwayne put out. He had talked to us as he put that trade alert out, and I got into this this trade. Here, I took a YBR trade just to illustrate that to our traders. It ended up being a break even though price did what we expected, and ended up going and putting in a new high. It went without us, and here took another opportunity, a long trade here on the ES, and it was also break even. So we're back to not having much in the way of follow through. So indicated that we had some of this sideways action coming. Right at the close, Dwayne was talking to folks about our speaker that's going to be here on the show at 1 today. This trade fired off. I made a circle of it, and this would have been a short trade, and that you would have had an opportunity to get a little bit of profit in as well. Once Europeans closed up shop, the ES is moving higher. Okay, so now we've got blue on the YBR, and if we get it up close here, watching the angle here on the cycle, it still looks pretty good up close here, and could take a long YBR trade. Okay, Keith, I apologize. The cyan works for others, so I'm sorry that the blue is not working so well on this for you.
Yeah, you know, it must have something to do with monitor resolution or something, because I can actually see it. I can see it well.
Okay. Laser, trying to remember. Mike got in gold, I believe. He had 3 trades. In fact, that it was 162.50. He got some points on the got some ticks on the ES, and I know he got some ticks on gold as well. I heard him, and I keep my GoToWebinar and my trading on separate computers. So when I heard how poorly he was feeling, I went and started to set up the GoToWebinar on my trading computer so that I could jump in and take off in the training room. So honestly, I wasn't paying attention. Can somebody else help me out here? Greg said he got 2 ticks on the euro. That could also be the 1250. Thanks, Greg. You're right. You're right on that. So we'll get Lays. I'll let you know what it was. When I get that feedback from our other traders. All right. Thanks, Dwayne.
Okie doke. All right. Let me grab the charts. So I normally say recap of the recap at this point, but do we have any kind of official number?
It took 3.
Go ahead.
Well, it took 3 trades and 7 minutes to get to $162.50 this morning, and it was Michael's 213th day, 13th day in a row of getting his goal.
And I agree with the folks in the chat box. You did an excellent job this morning, as you always do. Thank you very, very much.
My pleasure.
Okie doke. All right, guys, let's dive right in. We got 30 minutes until Sean shows up. And Sean Moloney is a luminary of the crypto space. In particular, along with Bitcoin and the others, he has a wealth of knowledge regarding the G999 coin, which is something we've discussed here on the show of late. That's the coin you find at gstrade.exchange, but we'll be talking about all of that and more at the top of the hour. But for now, we need to get our housekeeping done. As I mentioned earlier, since we started including video with the daily broadcast back in 2011, according to YouTube, we've done over 1,600 individual live daily broadcast. We haven't changed a thing in over 8 years. Not a code, not a line of code in our indicators, not a rule to our trading strategy. The only thing that we've changed is 125 weeks ago, after our beta test, we launched the Logic 247 Emini Alert Service. Now, the way this works, we open for business Sunday night at 6 p.m. Eastern. That's when the global futures market opens. Most traders think of trading as something you do starting Monday morning, at 9:30 a.m. Eastern, and then you clock out at 4 p.m. Eastern. However, there's a market out there that many people aren't aware of. It's called the Globex market, and it trades from Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. There's a 1-hour break every day from 5 p.m. to 6 p.m. Eastern. So today is Wednesday. This afternoon at 5 p.m. Eastern, the Wednesday session will end. Hour break. Got to sweep the floor, empty the ashtrays. And then at 6 p.m. Eastern tonight, Wednesday night, that is the official start of the Thursday session. So this Logic 247 alert channel, you're just looking at the recap right now, but I'll show you the alert channel itself in a moment. The alert channel is open from Sunday night at 6 p.m. to Friday afternoon at 5 p.m. Eastern. Alerts come out based upon whenever opportunity presents itself. We have traders around the globe, so an alert could come out at 2 a.m., it could come out at 2 p.m. Criteria is whenever opportunity presents itself. So far this week, we've issued a total of 49 alerts. 12 never triggered, still waiting on the results of 3. We've had 34 actionable alerts, of which 6 were stopped out, based on not risking more than $300 per contract per trade, based on market structure, using a simple 3-step methodology that I teach all of our traders. So with 34 actionable alerts so far this week, 6 being stopped out, that's 18% of actionable alerts stopped out. We've averaged over the last 125 weeks 20%. Yesterday when I did the recap, we were at 30 alerts total. So since yesterday's show, we've put out another 19 alerts, and we were at 21% being stopped out yesterday. Today we're at 18%. Okay, we cover the S&P, the Dow, the Russell, the NQ, crude, gold, silver, occasionally one of the currencies, occasionally natural gas, every now and then copper. If I see something moving in those markets, most of our traders tend to stay with the indices, primarily the S&P, but we also have traders who trade crude, gold, silver. So keep this in mind, and now we'll go to the actual alert channel. And when you're on a trial with us, you have access to everything we do. All of the alerts, all of the weekly trading zones, the live room in the morning. The only thing you don't have access to is the members only workshop on Thursday night. And this Thursday night, tomorrow night, because it's Christmas Eve, we will not be doing a workshop tomorrow night. Okay, now this is the actual alert channel. Last week, week 124, we had a total of 66 alerts, 53 actionable, 13 stopped out. I'm sorry, 8 stopped out. So we finished the week with 15% of actionable alerts being stopped out, but that's not a typical number. The average over the last now 125 weeks is 20%. So the one alert that we had carryover from last week never triggered. Good evening, welcome to Globex. That's Mountain Standard Time that you see. Okay, so it's 4 o'clock my time, 6 p.m. Eastern. So the first alert came out 6 minutes after the Globex opened Sunday night. It was a short on the S&P. S means sell, T means initial target, PS means potential support or second trigger, or second target. This is the trigger, initial target, second target, third and final target. On a short trade, the final trade to target is always the weekly trading zone below, and on a long alert, the final trade to target is the weekly trading zone above. So in this example, the market made $245 per contract traded available. When you start with us, you don't start out trading live, you start out in the simulator in the demo account as we teach you our methodology and our strategy. That's what the live trading room is about every day. It's not a trade calling room. And Michael does, and Valerie, they do call out what they're seeing and what they're doing. But the purpose of it is to teach you how to read the chart, how to read price action, how to read the indicators, so that you can find these opportunities yourself. The idea is that you no longer have to be dependent upon some guru or some room or some tip sheet or anything. We want to get you to the point where it's just you and the market. That's all you need. The beautiful thing about trading is if you have a fast, robust internet connection, you can conduct business from anywhere in the world. That's a beautiful thing. The second alert that came out Sunday night was a short on the Dow. The market made $310 per contract available. And then a short on the Russell, $375 per contract available. Here's a short on the S&P, $137.50. First stop out of the week, the Dow, minus 300. Remember, we don't want to risk more than $300 per contract per trade, less when possible, based on market structure and the simple three-step methodology that I teach all of our traders. Here's a short on crude oil. Market made $770 per contract available. When you see these Z's, that means this was an alert to go long the S&P, but the S&P changed its mind and dropped. So we never hit the trigger. So that's what the Z's mean, no trigger. No trigger on the Dow. Here's an NQ. I guess we're still waiting on results. This is gold. This was a long on gold. Market made 90 bucks available. Silver. The market made $2,525 per contract available. Now, we're not the folks with the endless upsells. We're not the guys who are making some new discovery every other week, so you got to buy something else, buy something else. We have one thing that we offer, the CFRN Passport. The CFRN Passport gives you access to everything we do for life. There's no recurring monthly fees, annual fees. You buy it, you're a member for life. It includes the group training, the live training room, private one-on-one mentoring, our proprietary methodology, our indicators, and all of the alerts, which we're talking about right now. The cost of the passport's $5,000. This one trade, if you're trading one contract, $2,525 per contract traded. Now I said you don't start out live, you don't. You start out in the simulator, in the demo account. What we want you to do, and this is on the honor system, so if you cheat, well, it's only going to hurt you. We want you to put 10 consecutive days in a row together where you reach your goal using our strategy in 10 trades or less. 10 consecutive days in a row where you reach your goal. Once you accomplish that, our blueprint will give you the green light to actually go live with just one contract. Once you go live, you have a new goal, and that is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Now that second contract is being added with profit you earned in the market. First contract, when you go live, you want to see if you opened your account with $3,000, you want to see it go to 5. If you opened your account with $5,000, you want to see it go to 7. The blueprint will give you the green light to add contract number 2. You'll trade 2 contracts for a while until you've made enough money to add a 3rd contract. You'll trade 3 contracts until you've earned enough money to add the 4th, and you just climb that ladder of success. The blueprint is called the 24/20 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. So there's no get rich quick here. Now that ended Sunday night. Everything you just saw, everything we just went over, that was Sunday night. Remember, Wall Street doesn't wake up until Monday morning at 9:30 a.m. Eastern. So now we're into Monday. No trigger, no trigger, no trigger, no trigger. Then we had a short on crude, 90 bucks. Short on gold, 380 bucks. A stop out on the S&P, minus 300. No trigger. Stop out on the Russell. Here's a long on the NQ. Market made 245 bucks available. Here's a short on silver, 775. No trigger. Stop out. Here's a long, B is buy, initial target, final trade 2 target, 75 bucks. No trigger, no trigger. There's a short on the S&P, $362.50. That's what the market made available per contract traded. Short on the Dow. Here's a short on crude, 770 bucks. A short on the Dow. Now, these alerts come out to you before they trigger. This isn't a woulda, coulda, shoulda thing. You know, when a guy brings up a historical chart, anybody can look like a genius with a historical chart. These alerts come to you with enough time built in that whatever you're doing, you have time to finish what you're doing, get to your desk, put your thinking cap on, put your trading cap on, because we don't want you to just trade an alert because it's an alert, because then you're not learning anything. We want you to look at the chart, look at the alert, look back at the chart. I want you to understand why the entry is where it is, why the initial target is where it is, where the second target is, the third. I want you to understand why. That's part of the learning process. So here's 390 bucks on the Dow, S&P 87.50. Here's a short on the NQ. The NQ pays $20 per point. This alert, the market made $1,430 per contract available. Stop out on crude. Here's a short on gold. Here's a short on silver. No trigger on the S&P. Short on the S&P. This one made $800 per contract available. This is a short on the Russell. It's almost $1,000 per contract available. Still waiting. Here's a long on the Russell, 750 bucks. Stop out on the NQ. No trigger, no trigger, no trigger. This brings us up to today, the 23rd. This was a long on the S&P. Now this came out at 12:44 a.m. Mountain Standard, so that's 2:44 a.m. Eastern. The London market opens at 3 a.m. Eastern. Now we start at the beginning of Globex. We trade through the Asia session, and then the London open, right up until the Wall Street open. We're fluid around the clock, and everything we teach you. See, we don't trade crude differently than we trade the S&P, differently than we trade the Dow. We use the same strategy, the same indicators, the same everything on every market. Everything we teach you is fluid across all markets and all time frames. A lot of folks will tell you, well, you know, you can't really do that because the markets have different markets have different personalities. Well, they probably do. We're not looking for a relationship. We're just looking for a high probability, low risk window of opportunity. So that's 87 bucks on the S&P, 380 bucks on the Dow. On this one, We made it to the target. I don't have the numbers on that one. Still waiting. Here's a long on the Russell. Here's a long on crude. Still waiting on the NQ. Still waiting on silver. Okay. So everything you just saw is summed up in this. 49 total alerts since Sunday night at 6 p.m. Eastern. 12 never triggered. Waiting on 3. 34 actionable. 6 stopped out. It's 18% of actionable alerts stopped out. Now, we also have another alert service. In fact, it was our original alert service. It's called the Concierge Trade Alerts. Now, these differ. These don't come out around the clock. These come out shortly after the Globex Open. Last night, Globex opened at 6 p.m. Eastern, as it does every night, and I got this static report out quarter after. This is forward guidance for the entire session. These numbers are good for the entire session. There's 2 numbers for each market. Once the report comes out, if price starts to trend up towards 36.82, then that gives you a bullish bias or bullish sentiment on the session. If once the report comes out, price starts trending down towards 36.69, then you start to develop a bearish sentiment on the session. Once we hit 36.82, we want to be long and or only looking for longs above 36.82. And when we hit 36.69, we want to be short at 69 or only looking for short trades at 69 and below. If you want to grab a screenshot of last night's Concierge Alerts, there they are. 5, 4, 3, 2, 1. Okay. All right, we've got about 10 minutes here to the top of the hour. Let's go to the daily chart. Now, last night, I posted this in the discussion group. When you're on the trial, you have access to the discussion group. You get to talk to all of our traders. You know, those who have come to us and said, hey, I want to learn how to trade. They paid us their hard-earned money, and we have either taught them or are in the process of teaching them how to trade. And I started trading Emini Futures in 2005, and I'm still learning every single day. So last night, I posted this in the discussion group. Window of opportunity overhead. Okay, we had the high of the session, and then we had the high of the previous day. So I said there's a good possibility, high probability, that price will rally up and find resistance at the step line and the CFMA1. We ran up, we tagged it, we found resistance, and look at where we are right now. Now, important prices, important areas are almost always tested. So what happened was we ran up and we tagged it, and then we backed off. Buyers came in, ran it up again. So this window of opportunity was filled twice. Now, when you're on the trial, again, you can scroll up. There's over a year's worth of content. Questions, answers, discussions, teaching, training, charts, videos, and you have access to it all when you take the trial. And there's no credit card required to take the trial. Just go to eminitrainingschool.com. So we're at the 38% Fibonacci price extension. We hit this swing high right here. This is the all-time historic intraday high in the S&P 500 Emini Futures. That high is 23. Actually, on this day, we tagged 24. Now, when price reaches resistance, in other words, price ran up to 37.24, but nobody, not one trader, not retail or institution, was willing to pay 37.24 and a quarter. So when price hits resistance, it will turn around and go look for support. When price pulls back to this green line, the BBC, we expect good support. And it was. We spiked it all the way down to the 24% fib. Buyers came in, rallied it back up, and that brings us to where we are today, back at the 38% Fibonacci price extension. Now today's high is 36.99 and a quarter. Yesterday's high was 36.95. So we've taken it out by just a bit. We have an engulfing candle. What that means is, now this is not proper context for bullish engulfing. This is simply a continuation signal in this context. But it is very bullish because we have a higher high and a lower low, and we're printing a green body. Okay, so that's the quick take on the daily. And I always start with the daily chart. I recommend you start with the daily chart. Okay, get that bird's eye view of what's happening down on the field. Then we go into the smaller time frames to navigate between these important areas of major resistance and support. Now this green line, I said it's called BBC. That just means bull bear cross. When price crosses below the green line, we're bearish. We anticipate lower prices. When price closes above the green line, we're bullish. We anticipate higher prices. We got above the BBC on November 4th. It was confirmed by the cross right here on November 10th. And we haven't closed below the BBC since November 4th. Now we did spike it intraday. We came down from on the last leg up from the low, which was put in October 30th. We're talking just the last leg up on the daily chart, from the low to the high. Okay, this is the 24% Fibonacci retracement. That's the shallowest Fibonacci price retracement, and you can see it's almost like an obsessive compulsive thing. Price just had to come down and touch it, and once it did, it was rejected. Buyers came in and drove it back up. Right now we're trapped between the BBC support and the step line and the CFMA1 and the 38% price extension resistance. Okay, that's the bird's eye view. Now let's go look at the 30-minute chart. Okay, everything I said about the daily chart as far as principles and principles upon which we observe the daily chart and take our instructions from the chart, the same is true on the 30-minute, the 5-minute, the 1-minute. The larger the time frame that you get your information, your signals, your support, your resistance from, the more important it is, the larger the time frame. The 30-minute is what all the alerts are based on. Now, last night's Concierge Trade Alert for the S&P was to be long 36.82. That's the one I just drug up and showed you, 36.82. Now, if you didn't grab a screenshot, I'll give you one more shot. 36.82. Okay. Got it? Okay. So from 36.82, price ran up to 36.90.75. So we'll call that 8 points by 36.82. $36.82 up to $36.90. That's 8 points at $50 a point. That's $400 per contract traded. Now, important prices, important areas are almost always tested. So what did price do? It dipped back below the trigger, found support at the BBC. That's what we expect until proven otherwise. And then price takes off again. This time it puts in a swing high at 36.97. So that's roughly 15 points at $50 a point. And we've just been riding the back. And we got a retracement back to blue and climbing. and the step line, which when we approach from above, we expect to be good support. You'll see over here how price just climbs the back of blue and climbing. And over here, we're just climbing the back of blue and climbing. We have our next weekly trading zone for this week overhead at 3705/3706. Once we close above this zone from last week we had a zone at 3697/98. So once we get a close above last week's zone, then the high probability move is up to the zone overhead. We do not know what's going to happen next. No one does. Now, there's a lot of clever websites out there, or should I say deceptive websites, that try to convince you that somebody has cracked the code and that they actually know the future. Well, God didn't create the universe that way. He did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So the next time somebody tells you they know what's going to happen next with certainty, please refer them to Genesis, okay? Because that would defy God. Now, since you can't know what's going to happen next with certainty, what can you know? Well, you can know with certainty, 80% of the time, what the next high probability move is. So, we've got 2 minutes left in the life of this 30-minute candle. It appears that we're going to close above last week's zone and the previous 30-minute high. So that gives us a window of opportunity from, we'll call it 3,700 up to 3,704. You would do well to remember that weekly zones are an area. Yes, it's an exact number on the chart, but just like with fibs are an exact price point on the chart, but it's an area because you might be waiting on a 50% retracement, Fibonacci, and it doesn't quite get there, or perhaps it spikes it by a little bit. After the fact, you can see that it clearly held, or that it bounced just shy of getting there. So just remember, so that's why if I were to publish this as an alert, okay, I want to see the close, and then I want to get just a little bit above that. So round number, we'll call it 3,700 up to 3,704. That's a 4-point move at $50 a point. It's $200 per contract traded. I don't want to put it right on top of that high. I want to give it a little room, okay? Because the market will often put in a nominally higher high by a tick or two and then reverse. So we don't want to get caught up in that. So we put our entry just a little bit above 3,700. We expect resistance at 3,705. So a beautiful window of opportunity, 3,700 to 3,704. Let me check the audience to see if Sean is here yet. There he is. Sean, I'm going to open up your mic right now. Sean, it looks like you're okay. You just unmuted yourself. This isn't your first rodeo. Sean,
no, serving up, Dwayne. How are you?
I'm doing
great. Great to be here, Dwayne.
Hey, thank you so much for taking a little time out of your day to come and join us.
My pleasure.
Yeah, maybe you could kind of introduce yourself, since I don't personally know you, but I have seen your post on Facebook. I know you're involved in a lot of different communities online, and that you've been around this thing called blockchain for a while. So tell us a little bit about Sean.
Yeah, for sure. We've been around blockchain for quite a number of years, most of this decade actually, which has been a very interesting decade. We basically come from a bricks and mortar background in business and in property. We were running business for many years and still do. But in 2008, we came across a bit of a snag in the plan, as I think many of you and your listeners would testify to, who all know what happened in 2008. And we were given some challenges that were none of our doing. Right. So we had to react. and I didn't really know what to do. I just knew that I couldn't any longer leave myself 100% reliant on a banking infrastructure that was able to pull off what they pulled off to us
what sort
between
of
2000
industry or business were you in prior to the blockchain era? Were you in real estate or finance or?
Yeah, no, absolutely no. When I say bricks and mortar, we were literally into property. We still are. That's a significant part of our portfolio still. But no, we were in industry. We were in manufacturing.
Okay.
So we had capital, we had employees to worry about, we had all the overheads that come along with manufacturing industry, and it was just an overnight shift that caused some challenges to us. That when I looked deeper and deeper and deeper into the issue, I realised where it came from, and now I understand much more than I ever did before. Obviously, a decade later, as to what was going on there with regards to the banks basically shoring up their own balance sheets. So now we understand that, and we've been through the journey. Subtle things that you'd never really hear about. It's certainly not. This education is certainly not provided to ordinary people in the school system in any part of the Western economies. As you guys may have noticed, I'm not US based. I am based in the UK.
I was going to say you have a little bit of an accent, so okay.
a little bit. But I'll cover that in a minute. But the bottom line was that I knew I needed to look at a little bit of monetary history, to look at some of the realities of the difference between money and currency. Which once you understand that difference, you soon see the challenges that the current financial infrastructure has, and the influence it has over ordinary people's lives. So we embarked on that premise, on a journey of discovery, and part of that journey brought us into Bitcoin all those years ago. And while I didn't fully understand it back then, and I didn't really understand the premise of and the purpose of Bitcoin, we certainly experienced what Bitcoin's power is.
How long did it take you to kind of get a handle on? Because I know many of us, myself kind of included, still struggling. It's a new concept. I mean, I don't know how old you are. You look very young in the picture I have up from one of my Facebook pages. But, yeah, I'm an old school kind of guy.
Yeah, I'm being very kind to me. Well, that picture was probably a couple of years ago. I'm 45 years of age.
Oh,
but
you look good.
Yeah, well, like I say, it was a couple of years ago. But we took a leap of faith into Bitcoin. We to be honest with you, Dwayne, we really didn't have any perspective on the options that were available, because every single thing that we demarked our net worth under was based on fiat currency. So it was completely accidental that we decided to, first of all, own Bitcoin. But the real decider for me was when I decided myself a couple of years later, actually, to start to investigate what Bitcoin was actually built on. And the mistake people often make is getting involved with digital assets such as Bitcoin on a speculative, price-orientated basis. You're much better to go back and have a look at the blockchain itself and its value use case in human society. And then you'll start to understand the power of Bitcoin, which is just one use case in an increasingly wide universe. I call it the blockchain universe, of actual applications in which the blockchain is changing the way humans exist. So that's really where we're at today, is now understanding very, very well exactly how the blockchain is adjusting human existence, simply through mechanisms such as reduced costs, more efficiency, increased trust, more transparency, immutability, peer-to-peer. Some of these words you may have picked up on in the blockchain space.
Right. Well, we started talking to our audience here back in 2012 about this thing we were hearing about called, Bitcoin and blockchain. We should have been buying it instead of just talking about it, but hey, that's another story for another day. But I became very interested in the Ethereum blockchain. Of course, Bitcoin was the first one to move, and it's still the big name. Most people, just like when we say we're going to go search for something on the internet, we now say we're going to go Google it. And so for most people, cryptocurrency is Bitcoin and Bitcoin alone. But we actually launched a coin, and we launched on the Ethereum blockchain because I started reading about this thing called smart contracts. And my understanding was that while Bitcoin could be a store of value, that this Ethereum could actually be a store of value plus so many other things. It would allow, transactions and efficiency and reduced cost, all the things that you just mentioned. Could you possibly help our audience understand the difference between Bitcoin and the other, like the Ethereum blockchain and the altcoins that are out there?
Yeah, it's a fantastic point, and a very, very interesting point that I'd encourage anybody to work to understand, because what basically has happened is Bitcoin is seen as what we call the gold standard of blockchain. It's actually probably never going to find its true utility. The utility of Bitcoin is simply to become a highly secure peer-to-peer means of exchange. And that's what was gifted to us by Satoshi Nakamoto back in 2008 in the original white paper. The irony is that it's now become much more than that. It's become a standard on which blockchain is being realized. And as a result, particularly over this past 12 months, funnily enough, it's becoming more and more part of the traditional financial institutions. There's billions of dollars now held on treasury accounts inside what we'd class as normal institutions. So Bitcoin is very much taking its stance as a core coin. It's become bigger than itself in the sense that it's the entry point that most people who wish to own blockchain technologies come in through. And that's been manifest now in the institutional level, which is why you're seeing what you're seeing with Bitcoin in this past 12 months. And we will see that going into 2021, 2022 in some significant detail. So well worth keeping an eye on Bitcoin. But behind the scenes, which you very astutely point out, is platforms such as Ethereum, and there's others as well. Look at them layer one assets. They have an ability to enable anybody to create use case on top of a particular protocol. And if that use case is deemed of value by human society, then clearly not just Ethereum, but also the denoted coin on top of that, layer two, we call that, also can create a value proposition, but not because of a perceived value in a market, but because of an actual use case that's useful in society, just like a business stock should be. And I say should be because clearly we always must remember a true value as opposed to a perceived value, even when it comes to stock valuations, especially in this time of heavily printed quantitative easing type money supply. So there's no question, and Ethereum's not been around very long. It's something that has lit up the world of blockchain, and most recently in the world of what we call DeFi, which is decentralized finance. It's giving now the ability for ordinary people to be able to actually stake their own asset base, create their own interest rates, and create forward cash flow momentum with regards to assets they actually own on private keys, private wallets, that we call being your own bank. We call it being your own bank, putting assets to work for you to create cash flow, just like you would set up, going back to my past, just like you would set up machines inside factories to create value. We build factories based on blockchain, and we put machines inside those factories to create cash flow. And it's a very, very powerful means of not only owning the asset base, on the fundamental asset base, but also creating all important cash flow to grow into your own business in a private manner. So it's a fascinating area of study.
I'm looking at the coinmarketcap.com website right now. It says the global crypto market is currently $642 billion. That's B as in boy, $642 billion. And this is an industry that did not exist a decade ago.
That's very true. In fact, in 2017, that was nearly $1 trillion cap. So it's actually been up and back down again. It came down to 3 billion just this year. It's doubled just in the past few months as a result mainly of Bitcoin, which is about 65% of total cap. So, you know, we choose to look at this technology in the medium to long term. There's lots of speculators. There's lots of, in this industry, we call them shillers. They will push different agendas and try and create lots of a FOMO in this space.
Mm-hmm.
Excuse that
for those who don't know the term FOMO. Yes,
exactly, and an unfortunate a term that we also use in this space is shitcoin. Okay,
mm-hmm.
So forgive me, but
no, it's what
that
it's
is
called.
a term. That is that's the term we use. So do be very, very careful. Okay, but fundamentally, if you understand fundamental due diligence and looking at the real use case of another term that we use, which is called tokenomics, then if you understand coins that actually have a purpose, are well backed, are well marketed, are well structured, then there is plenty of interesting projects to be part of, not only as an asset owner, a direct token owner on the blockchain, which, don't forget, is immutable to you and nobody else. There's no middlemen in blockchain. It's your decision. You've got to take responsibility. But not only can you own the asset, you can also be part of the process in expounding the benefits of that particular asset in the real world use case. And that's what we call tokenomics. When those things combine, you're actually able to be an advocate of your own value proposition, a user, a promoter, so that you can actually have a say in the value of your own asset base, which is a very fascinating area that blockchain provides people.
An example of removing the middleman, the first one that pops to my mind is those of us who live in the United States know that a tremendous amount of money is sent to Mexico every year. It's in the billions of dollars. People come from Mexico to the U.S. to find jobs, to work, and they send money back home to support their families. And Western Union, for a long time, had a stranglehold on that market. And then we saw things pop up like MoneyGram, but even that required that you have to go to Walmart, stand in line, fill out forms, show your ID in order to send money to your family back in Mexico. I read yesterday that the current figure for remittance from the U.S. to Mexico, 7% of that remittance, 7% of a market that was controlled by Western Union and MoneyGram, is now being sent via Bitcoin, and there is no middleman. There's no store you have to go to, no line you have to stand in. You just open your wallet and you send that money to your family member's wallet in Mexico, and it's just there.
Yeah.
What other examples can you think of where we're removing the middleman?
Oh, there are a great deal of them. I mean, we're personally involved with about 45 different projects in the blockchain industry, and it's quite fascinating what's going on, Dwayne. That is a great example. It's the classic example where people are voting with their feet away from centralized shareholder-based organizations that make their money from fees and distribute that profit up to shareholders. What goes on in the blockchain is much more sophisticated and much more fair, in my humble opinion, because we actually redistribute wealth. So just to use your example, rather than it necessarily being value being moved by standing in line, taking fiat to a MoneyGram exchange, and then having various sets of hands take a piece of that value before it gets to your relatives. What we, as you say, what we can do now, and Bitcoin is one way of doing it, but there are actually much more sophisticated ways of doing it that allow individuals to redistribute the fee distribution. So, for example, the person sending the particular means of exchange could be an owner, a token owner of that service, which is one side of the tokenomics model. They're using the model, which means they're actually advocating the use case. And the family on the other side of the border could also be a asset owner of that particular means of exchange and also be using the function. So by definition, what happens is as the token is used in the blockchain to make the transaction happen, it's creating value, it's creating demand on the asset. So therefore, the family sender and the family receiver are indirectly creating an income, not only from the movement of the exchange, but also by the ownership of the asset in the first place. So that's a very popular way that it's done. But we have all sorts of other ways that we do that. I'm here in the UK, and we own several properties across the United States of America using the Ethereum protocol, in other words, a smart contract that allows us to take tokenized micro ownership of rental properties across the North America. And we get paid in Ethereum as the tenants rent the property. So we're capitalizing the ability for an LLC, an organized, above board organization to purchase properties. And they raise capital through people like me to be able to purchase those properties. They organize the tenants and look after the property. And thousands of micro owners all over the world of that particular smart contract based on that particular property take an income, which basically, in a nutshell, Dwayne, completely removes the need for banking as we know it.
I think you just gave me a glimpse at something I've been trying to understand now for a while, because I keep reading that we're heading towards a time where real estate and fine art and all kinds of other tangible things in the world will exist on the blockchain. And I've been trying to wrap my mind around that, but I think you just lifted, I think the scales fell from my eyes a little bit with what you just said in the way that you're using it. Now, Bitcoin it has its own blockchain. Ethereum has its own blockchain. And my understanding is that most of the altcoins are built on the Ethereum blockchain, ERC20 compliant. Is that correct?
Yeah, that would be be a safe but broad thing to say, yes.
And then some coins create their own blockchain, which the example would be this G999 coin. Can you tell us about that?
Yeah, so we're getting into sophisticated business models, but you end up in this very interesting dynamic. So you've heard me already talk about the difference between currency. Well, I've not spoken about it, but I've alluded to the fact that your audience would do well to go and study and understand the difference between currency and money. Okay. A great resource for that would be probably somebody most of you guys have heard of, Mike Moloney. He generated a documentary series called Hidden Secrets of Money about a decade ago. I was just going to ask you
if there's any relation between you and him.
Yeah, there's not. No, okay. He's a Californian with the money. The Moloney is MA and I'm MO. So,
gotcha.
But it's obviously an Irish background. But if that's a resource that I would encourage your listeners to go and refer to, because he does a great job of, first of all, separating money from currency, and there's a very good reason he does that. Now, what's basically going on, and this is relatively new technologies inside blockchain, you're getting platforms such as G999, and there's another one called V999, which do have a interesting business model as per the white papers. The white papers are documentation that we tend to use in this space to understand the business model's purpose on the blockchain. And what's basically happening is we're looking at an era whereby we'll be tokenizing hard assets. So I've alluded already to a property scenario. We also do that with power distribution. Believe it or not, Dwayne, we monetize the sun these days through blockchain, using solar panel technologies that we invest in. And we also work very hard on the tokenization of assets such as gold. So the project you're alluding to is on a journey towards that premise, whereby we are actually able to move instantly between digital and physical assets based on gold. And gold is what you'll hear people talk about as being real money. It's true money because it protects you from inflation. It's got zero counterparty risk. It's in demand at all times, and there's only a limited supply of it. So it's something that's happened over many, many, many generations. For thousands of years, people have always gone back to gold to be the the ultimate determinant of true value.
Unlike the U.S. dollar, where our Federal Reserve just keeps printing and printing,
yeah.
and as you dilute the supply, the dollar becomes worth less and less until it's finally worthless.
Yeah, which is the inevitable consequence of all fiat currency. If you simply Google fiat currencies or failed fiat currencies, you'll find thousands of currencies that have failed over generations. And it's something I didn't understand. And that's what I was alluding to at the start of the conversation with regards to what happened with my realization with the banks suddenly able to not only protect themselves by limiting the ability of my balance sheet, because they wanted to shore up their own balance sheet, they also had the privilege of being too big to fail and using hard-working taxpayers' money to protect their own balance sheets at the detriment of the taxpayer. Now, that's gone on for generations, but it's been particularly relevant in this past decade. And unfortunately, Dwayne, it's been absolutely obvious in this past year because of the particular incidents we're living through right now. So what do? Well, we have to understand and go back to basics with the principle of protecting your purchasing power. Owning gold is like putting your energy into a time capsule today. You're putting energy into something that you own, ideally physically. But what's happening more recently is we're able to tokenize that ownership, which gives us then the ability to spend our gold just as we would currency through blockchain technologies, and now the burgeoning ability of people to use platforms like Crypterium or Crypto.com or Wirex, or very, very shortly now the G999 MasterCard. So it's taken away the problem of not being able to liquidate gold, but at the same time giving you the benefit of holding gold.
Because the supply of gold, as you said, and silver, which I'm very bullish on silver. Folks don't talk so much about silver these days, but I think the upside potential for silver is much greater than that of gold for a number of reasons that my audience is already familiar with. I won't go into them today. But after, at the end of creation, on the seventh day got rested, and, no more gold, no more silver is being made. Whatever exists, it's a finite supply, unlike the fiat currencies.
Yeah, for sure. And I'm using the gold as the example of tokenization on the blockchain, but it equally applies to silver, palladium, land, diamonds. We're simply on a journey of tokenizing hard assets.
When someone says that a particular token is backed by gold, what does that really mean?
Well, it has to literally mean what it means. I mean, this is the challenging and interesting journey that anybody who chooses to embark on it will find. I mean, you can look at COMEX, for example, and ask the question of, is that gold actually in existence? You can look in your fair country that you guys are in right now and ask how much gold actually exists in your treasury, and when was the last time it was audited?
Yes. We have these ETFs here. I'm guessing you have them there as well.
Sure.
GLD and SLV. People hear that that a well-diversified portfolio will have X percentage of exposure to precious metals. Okay, so people go out and they buy these ETFs like GLD. Now, if someone takes the time to read the prospectus, and I did that on this radio show years ago, and we went right to the middle of it, buried in the fine print, where it clearly says they have no obligation whatsoever to buy any gold with the dollars that you give them, that the GLD price is simply a proxy for the price of gold. And I believe if every American or every person in the world who owns GLD or SLV, if they realized that, they would come out of it. And if everybody came out of those ETFs and went looking for real physical gold or real physical silver, the upside explosion in price would just be, some of these what sound like crazy targets for the price of gold and silver in the future would quickly become a reality. I think it's criminal that people are being fooled into thinking they have exposure to precious metals when all they've bought is a piece of paper that says, yeah, gold's worth this much today.
Yeah, and unfortunately, it's the people left holding that bag generally are the pension funds, because people are being advised that they have protection in those types of ETF products, etc. But as an individual, you really should be looking at the true nature of where your hard-earned energy is being placed every single day for 40 years of your existence. So this is the difference. So that point is where we talk about the tokenization of hard assets on the blockchain, and that's the big difference, is denoting projects and institutions actually now that do provide fully audited reports on the gold's existence, that you are able then to own directly without any middlemen through blockchain, immutable smart contracts or otherwise, and that is technology that exists right now. And it's very, very interesting, and it's something that it deserves study if you are determined to take some level of control over your future purchasing power protection.
Now, there's so many altcoins out there. For those that don't know that term, I guess alt stands for alternative, something other than Bitcoin. The question I hear a lot is, well, do we really need all these different coins? What's the purpose for it? Why isn't Bitcoin sufficient to just get the job done, or Ethereum? Why do we need the altcoins?
Well, for the same reason that human beings are used to creating multiple use cases on the same demand. You know, there's several ways of purchasing a sweet black drink with lots of sugar in it. There's several ways of acquiring a burger in a bun. You know, organizations on the blockchain will continually find better ways to be more competitive than somebody else. Now, you know, there's over 6,500 blockchain coins in existence right now in accordance to coin market cap. You could probably double that in actual reality. But, you know, it's no different than the stock market.
Because not every coin is listed on coin market cap. You have
No,
to
not
meet
at all.
a certain threshold in order to even be recognized. Okay.
Yeah, for sure. And so I'll always try and relate back to the stock market, which is something that we've all grown up with. We've all understood for generations. It's no different than that. There's multiple different companies that do the same thing fundamentally, that have position on the stock markets. So, and even more companies that aren't listed on the stock markets that do the same thing. So it's no different than the traditional world of business, having all these different kinds. They're just more visible on the blockchain because of directories such as CoinMarketCap.
We're still at the dawn, I think, of this new age, even though, again, we first used the word Bitcoin on this show back in 2012. I still feel like we're very much at the beginning of very much a changing world, how we do business. How do people, or just in your opinion, how do people who are not yet in, you know, many people are sitting on the sidelines. They see Bitcoin we're up over 20,000 now, 22, 23. They think, oh my gosh, a year ago I could have got in at 3,000. The ship, you know, the train has left the station. At this point, how can people best take advantage of the future?
Well, the first thing you need to do, in my humble opinion, is not look at the space with dollar signs.
Okay.
The big mistake people make, and we've all been there, is you get drawn into the space as a speculator. That's really the last thing you want to be. The space will chew you up and spit you out. And you saw that happen back in 2016, 17 with the big retail money that came in, the amateur money that came in, causing a bubble. Lots of horror stories about how people who decided just to jump on the bandwagon because they got greedy. And we all know greed will kill you. They didn't do any due diligence. They didn't do any investigation as to what Bitcoin was actually designed to be. And they certainly didn't do any investigation as to what blockchain is. So the first thing you should do if you're looking at embarking into this space is go and get yourself educated about exactly what blockchain is. You know, we run, just a little bit of a plug, we run some very successful courses just based on that alone. And then we're able to build on that particular foundation an awareness that allows people to go through a process of due diligence based on true valid use case that happens to use blockchain technology as opposed to analog technology. For example, there's projects we work with that are relevant in the sense that in the US government office alone, there's about 50 trillion pages of documents that move around per annum in that particular method of organizing society. And in that, because it's manually driven, you've got the problem of high cost, which manifests itself as employment, you know, not to say that it's wrong or otherwise, but that's what we're used to. People are paid to sit in booths on computers moving documents around. So that's a big cost. The other thing that comes out of that is obviously corporate fraud, because humans can't be trusted. We know that. And you've got billions of dollars. Yeah? So what's happening is blockchain is correcting that problem. It's providing competition, just like it's in the same in the banking sector. It's providing competition for the first time in human existence against what we regard as normal. Just at the time that the American precedence over the monetary standard is coming to an end. So what you should do is go with a high perspective of what fundamentally blockchain brings in efficiency and cost effectiveness to the world, and then look for projects on that premise that are more closely aligned to what we call letting the market come to you. So if you understand that there's a problem being solved, and it's more likely to be solved with the blockchain technology than maybe other challenges in human existence, then you can put yourself in front of those projects as a coin owner and put them into private ownership under your control in your own private wallet, and then let the market come to the adoption of that particular premise. So I really strongly, Dwayne, advocate that people do not speculate, that they get involved with projects because they understand the fundamentals of why they even exist.
Well, a question that's popping up from my audience is, does Sean have a site? How can we follow Sean? How can we follow some of these projects that you've alluded to? Do you have some specific spots on the internet that, because my goal is to educate my audience as best I can. And so any resources that you are a part of or that you have and know of, please feel free to share those.
Yeah, I appreciate that. And we do this agnostically, Dwayne. So I don't promote necessarily for monetary gain. Obviously, we work to cover our overheads. We work to make sure that we have make a living and we can afford to do this full time, which I'm very proud to say that we do. We've just come on our trip to Dubai with the family, very pleased to say that, to back some of the projects that we've been talking about. But on the same breath, I take it very, very seriously that we do our very, very best to advocate the true value that blockchain brings to human society. And it covers everything from disrupting the ability for people to be able to actually trust the vote, all the way through to people being able to empower themselves and become their own bank. And we help that in all sorts of different ways. So the very best place that you can find me is probably through Facebook, to keep things simple. You can see the logo on the screen there with regards to my main Facebook group. We're very proud of it. We're in there all the time, creating value for people, free at the point of use. And you'll find me if you just search on Facebook, DBM, D for Dominic, B for business, M for mother, wealth. My business is Digital Business Masters. And on that Facebook group there, DBM Wealth, you'll find me there, as you can see on the screen. And I'm more than happy to welcome serious people into my community, and we can have these conversations over and over and over again as we work through this together. One of the biggest advantages of blockchain, in my opinion, Dwayne, is the community. It's a peer-to-peer based technology which demands community, and in that you're able to carve out an ability to help others for the right reasons, not just chasing the quick buck, not just going after quick wins, but to actually help others, to be able to help others. I call it the new social welfare. It's all based on financial education, and blockchain is simply a tool with which we use the movement of people being able to empower themselves.
Now, we hear a lot about the world is moving towards a cashless society. Some even say that's a biblical concept, that in the last days that we will one world government, one world money, that kind of thing. Do you foresee in the coming years that the world moves to completely, I mean, the US dollar is really a digital currency now because only a small percentage of our money supply is actually ran through a printing press cranking out $20 bills and $50 bills. But do you think the central banks will go to a digital currency?
Yeah, they already are, Dwayne. So you simply just need to search a phenomenon called central bank digital currencies, CBDCs. And at the same time, do some research into a phenomenon that is being christened the new Bretton Woods. Your listeners may be familiar with the original Bretton Woods in the 1950s. There's a new Bretton Woods now being muted, and both CBDCs and new Bretton Woods are hand in glove. Now, is that a major issue? Well, as you say, less than 17% of currency as we know it, based on the US dollar, is actually physical. So when people ask the question of why do you own blockchain assets, we can't see them, we can't feel them, they're all digital. Well, it's exactly the same as your bank account. Most of that is just computer zeros, okay?
Except
the big
when you
difference
put your money in a bank, you no longer own it, the bank owns it.
Well, this is it, and custodianship is a big key part of this. And you know, part of the reason we advocate so strongly the education piece, Dwayne, is to make sure people understand that in the blockchain space, we don't want any other custodians. We want to be fully responsible, and that means understanding how to keep your assets secure. We use cold wallets and all sorts of different techniques for that. But the point about CBDCs is that it's inevitable now, and it's starting to happen certainly in Western society. I think the latest numbers, it came out with Trump just overnight actually in the UK, where we saw $600 being agreed through Congress to be airdropped into people's mobile devices to keep the show on the road with regards to people being able to keep, you know, but at the same time, there's billions of dollars going out into all sorts of other curious
gender identity in Pakistan. You know, people that are trying to feed their families in the Appalachia here in America, people going to bed hungry at night. Should we really be throwing that's taxpayer money? No.
Yeah. So again, people can make their own minds up about that. But the point is about CBDCs is it gives central powers the absolute ability to do that at will, and to create a situation that that basically puts even more onus onto our children's credit cards, and because they're simply borrowing more and more means of currency. Now, I find that immoral.
Yes.
Whichever colour of politics you happen to agree with or not, and so all the more reason why we don't trust CBDCs, and all the more reason why we advocate sovereignty and people taking financial responsibility. And one of the ways that can be done now is through blockchain technology, which cannot be moved, it cannot be taken away. The toothpaste cannot be put back in the tube. Because
the key word is decentralized, right? Because there's no one server or computer or person or anything that can shut it down, turn it off, make it go away.
No, just as with the internet. I mean, you get the smart comment of they could shut down the internet, but yeah, it's like saying they'll shut down the electric grid. You know, it's certain things must go on because they exist now in society, and people ultimately do vote with their feet. So the whole thing is mute with regards to the ability to shut down. For example, nobody owns Bitcoin, like nobody owns the internet. Right. So this whole premise is about what we can see in our lifetime. And the key for me personally, the father of four, is to absolutely make sure that we empower ourselves, obviously, for the rest of our life on Earth, and certainly we need to take very, very serious responsibility for our children, as every individual should, about how they are able to exist in their future. And the only way you're going to do that is to provide financial education in the first instance, and then allow your children to understand what it is for them to have assets that work for them, just as the wealthy have done over eons. Gold has always been part of that, and silver, etc. But now we have a new technology that's allowing us to accelerate a position much, much more quickly if people understand how it works. So that's what we expound at DBM. We are all about making sure that we give people at least an alternative. We don't let them get led by the nose by smart politicians and media, by people who may not have their interests at heart. And we know that the dollar was taken off out of people's control back in 1971 temporarily. And that has obviously led to lots of good things in society compared to how our parents and grandparents lived, but at the same time, at what cost? So we can't keep running down this road and pushing the expense onto our children's children. At some point, we have to take responsibility. And I'm a strong believer that blockchain gives us one such ability to make a difference in our own lives and the lives of others.
Well, Sean, thank you so much for coming on and giving our audience a little bit of an education, a little bit of clarity. Folks, I encourage you very much to go to Facebook, Google up Sean Moloney. In the show notes, there will be a link to this Facebook page. And Sean, as we continue forward into this new era, I certainly hope you'll consider coming back and joining us on some kind of a regular or semi-regular basis as more things develop.
I'd be delighted to, Dwayne, and vice versa. I mean, you know, we don't really know each other too well, but we come across each other in the space, and this is what it's all about. It's about these adult conversations. It's about sensible conversations. It's about conversations that lead to education and empowerment. And I strongly believe that with that, people will vote with their feet. I don't think we can rely on votes in the traditional sense anymore. I think we have to empower households. And I think with that, you'll find more and more people being able to move forward in life and create life opportunity that may at the moment not be as effective as they wanted.
Thank you so much, Sean.
My pleasure, Dwayne. Always a pleasure. Thank you.
I'll see you on the internet.
See you soon.
All right, guys. Be sure and visit Sean. Go to Facebook and just DBM right here, Digital Business Masters. And let me grab the charts back and we will finish where we left off. Okay, we were walking through the S&P window of opportunity. What's the swing high here? 3701.75. So an entry at 3700. You had an opportunity to pick up almost 2 points there. The final trade to target is up at 3704. Last night's Concierge Trade Alert was to be long the S&P at 3682. The initial push up took us to 3690.75. So that's an 8-point move at $50 a point. That's $400 per contract traded. If you've earned the right to trade 10 contracts, that is a $4,000 move. As I said at the beginning of the show today, as I say every day, the last thing in the world you want to do is open an account and start trading real money. That's the surest way to lose your real money. With us, you're going to start in the simulator and the demo account. You are going to trade in SEM until you show us that you have actually learned the methodology and the strategy that we teach. You do that by putting together 10 consecutive days in a row where you reach your goal in 10 trades or less. Now, this is on the honor system, so, you know, if you decide to cheat, you're only cheating yourself. Once you have put together 10 consecutive days in a row, our blueprint will give you the green light to go live with one contract, just one. The goal there is to increase your account balance by $2,000. Once you do that, you add a second contract with the profit you earned in the market. You'll trade 2 contracts until you earn enough money to trade 3. And then you'll trade 3 until you've earned enough money to add number 4. Now the difference is, and I'll use the S&P as an example, if you take just 2 points, and that's what this little box here represents, 4 points. Let me shrink it down to represent 2 points. 3,700 entry, 3,702 target. That's what that little rectangle, that's what 2 points looks like in the S&P. So if you're trading one contract, that 2-point move is worth $100. As you earn your way up the ladder, once you've earned the right to trade 10 contracts, that same 2 points of movement, the same 2 points of movement is worth $1,000. So this move here is worth $400 with one contract. It's worth $4,000 with 10 contracts. Just because you have enough money to trade 10 contracts is not a reason to trade 10 contracts, because if you do, soon you won't have enough money to trade any contracts. Again, it's on the honor system. So when you sign up, when you grab a passport, you have access to all of our training, all of our indicators, our one-on-one mentoring, our coaching, all of that. If you don't adhere to the rules, if you don't adhere to the guidelines, then you'll end up blowing up another account. And the very reason you came to us was because you're sick and tired of being sick and tired. You're sick and tired of wasting your time and your treasure going in the hole to get nowhere. So stop it. This time it really can be different. But it won't be different if you insist upon putting the cart before the horse. That's always awkward for the horse and the cart. So don't do it. You're in control. This is a business. The more you treat it like a business, the more it will behave like a business. If you treat it like gambling, you will get gambling results. And we all know that what you win in Vegas stays in Vegas. So that's the story for the S&P. You had an initial move up, 8 points, $400 per contract traded. Price got back below the trigger. Important prices, important areas, almost always tested. We now have a swing high up at 3701.75. Let's call it 3700. From 82 to 3700. That's an 18-point move. At $50 a point, that's $900 per contract traded. And if you've earned the right to trade 10 contracts and you're still in the move, the position's up $9,000. And that's just a function of math. That doesn't have anything to do with our methodology and our strategy. You could be placing your trades based on a coin flip. If you entered here and you're still in here, you're up $900 per contract, or whatever number is appropriate based upon the number of contracts you trade. Remember, a 2-point move with one contract is $100. With 2 contracts, $200. 3 contracts, $300. 10 contracts, $1,000. 20 contracts, $2,000. Now you might ask, well, gee, is there enough liquidity in the market to support me trading that many contracts? Let's go to the daily chart and let's take a peek at volume. So far today, we've traded 676,301 E-mini contracts in the S&P. In the last 21 minutes, we've traded 19,000 S&P 500 E-mini contracts. So is there enough liquidity? Yes. Now, I did say that our alert channels open around the clock. That an alert could come out at 2 a.m. or 2 p.m. Is there liquidity to support you trading at 2 a.m.? Yes, there is. Here's 2 a.m. Eastern. During that 30-minute period of time, 6,703 contracts were traded at 2 a.m. in the morning Eastern Time. Because remember, our Globex, our night session, is the UK's day session, and vice versa. So at 2 a.m., we saw 6,700 contracts trade. And then from 2:30 to 3 a.m., we saw 3,900 contracts trade. And then the London Open, 3 a.m. Eastern, 8,141 contracts traded inside of this 130-minute candle. Now, typically or often, the largest candle of the day, of the session. And remember, the session runs from 6 p.m. in the evening, 6 p.m. Eastern, until the following day at 5 p.m. Eastern. 23 hours a day. Now, when the market shuts down Friday afternoon at 5 p.m. Eastern, there's no trading on Saturday. Cryptocurrency is a different thing. Crypto trades around the clock because there is no centralized physical exchange. But the market shuts down Friday afternoon. It reopens for the new week Sunday night at 6 p.m. Eastern. That's when our alert channel opens, and it remains open round the clock till Friday afternoon at 5 p.m. Eastern. So far, we've only talked about the S&P, but we trade Dow, Russell, Crude, NQ, gold, silver. You probably wonder, well, how much do you charge me to learn how to trade all these different markets? We trade every market exactly the same. And I know I said earlier that, some people say that's not possible because different markets have different personalities. And I don't disagree, but we're not looking for a relationship. We're looking for a high probability, low risk opportunity. That's it, nothing more. Right now in the S&P, there's 2,700 contracts on the bid, 2,500 contracts on the ask. You got buyers and sellers. Some people are selling to close a position. Some people are selling to open a position. Same is true here on the buy side. Some of these buyers are looking to open a position. Some are looking to close a position. But they are buyers and these are sellers. Price channels back and forth, back and forth, back and forth all day long. Now, what if we go to a different market? Is the underlying principle or the underlying dynamic, is it the same? Well, let's see. What do you know? Buyers on the bid, sellers on the ask, price channeling back and forth, back and forth. So let's jump to a different asset class. Let's go with crude oil. Buyers on the bid, sellers on the ask, price channeling back and forth, back and forth. So what we do, what we teach, is the underlying principle of the market itself. So there's nothing to break, nothing to not work. We're not trying to outfox, outrun, outgun, outthink the market. We don't see the market as an enemy or a force that we need to conquer. We see the market as a business partner. That's my buddy. Get up, go to work, not to slay dragons in the marketplace, but to see what my buddy's up to, because my buddy here, the market's always right. So using our strategy and our indicators, you're able to drill down and see what the market's really doing, what its objective is. What's it trying to do right now? Well, right now, what price is trying to do is it's trying to take out this swing high. If it fails to take out this swing high, then it's going to take out this swing low. So I would wait for price to get just above this blue indicator. And what do we have? A window of opportunity from, say 48.35 to 48.45. That's the equivalent of 2 points in the S&P. $100 a day 2 points in the S&P. The equivalent would be 10 ticks in crude oil. 48.28, 48.29, 48. Each one of those ticks is worth $10 per contract traded. So everything we teach is fluid across all markets and all time frames. So if you've got your heart set on being an S&P trader, the Passport will work for you. If you want to trade the Dow, the NASDAQ, crude oil, gold, silver, even pork bellies, soybeans, wheat, corn, you name it. If it's a futures market, now this works equally well with stocks. However, the platform that we use is a futures only platform. Occasionally we do bring up some stocks on the show, and someday we'll have our indicators on a stock platform, but the futures market provides us with around-the-clock opportunity, incredible leverage. Now, maybe you're wondering, what's leverage? I'll show you. Okay, the current price of the S&P is $36.99.50. That's $3,699.50. And we know that the S&P is worth $50 per point. So if we go 3,699 times 50, when you purchase one S&P 500 E-mini contract, you're controlling $184,950 of best of breed equity. The S&P 500 are 500 large cap best of breed companies. When a company in the S&P 500 gets sick, misses their numbers a couple times, they get the boot. And nature abhors a vacuum, so if a company is escorted out of the S&P 500, another fresh, strong, healthy company is escorted in. That's why over time, the indices will always go higher. Now, crude is subject to physical supply and demand. Gold, silver, pork bellies are subject to physical supply and demand. But the indices are not. You might wonder, how many, see, we're trading the March contract now. If you wanted to think about it in supply and demand terms, you'd go, well, the first question would be, well, how many contracts were created for March? You'll never get the right answer by asking the wrong question. That doesn't even apply. There's an unlimited amount available. You'll never run out. Price can keep going higher and higher and higher, and there's an infinite supply. Now, you can find supply and demand in the marketplace, but it's not based on the number of contracts available. It's based upon the willingness of a buyer to pay the price that's quoted. See this swing high right here, 3701.75. There was not a trader on planet Earth willing to pay 3702. Price got to 3701.75 and hit a brick wall for the moment. Price pulls back. Whenever price hits resistance, in other words, nobody's willing to pay one tick more, then price will go look for support. Buyers willing to pay the price. So we pull back, and lo and behold, at the CFMA1, blue and climbing, we encounter buyers willing to pay that price, evidenced by the building of a green candle. Buyers, sellers, price channeling back and forth, back and forth. This time up, there may be buyers willing to pay 3702. How will we know? Price will print 3702. Okay, we got a lot of markets to get through, so I'm going to stop splaining. I've been trade splaining. I'm going to stop splaining and just go through the alerts from last night. You'll notice how when price drops, it finds support at a weekly trading zone. When it rallies, resistance, consolidation, and then it legs right on up to the next zone. These weekly trading zones are issued to our traders every Monday morning at 6:15 a.m. Eastern. Once published, they're carved in stone for the entire week. Think of them as fixed support and resistance. In other words, our traders knew ahead of time that the market, once it reached this level, would probably run into resistance. And look what happened. Fixed support and resistance. We've been publishing these zones since December 14th of 2009, over a decade. And they have performed wonderfully. Nothing's changed. Every zone we ever published is still out there. You can go have a look at it. Now, there are times when price fails to make it to a zone. We understand and we know that that's part and parcel. Remember I said earlier that zones are an area. See how close we came to the zone? We didn't get there on the first pass. This next candle, will it? Nobody knows. That's the most important thing I can tell you today. Nobody knows. Because God did not give us the ability to know the future with certainty, but He did give us a brain, and through the use of technical analysis, we can know with certainty what the next high probability move is. So last night on the Dow, the Concierge Trade Alert, it's to be long 3010. So 3010 is right there. The Dow pays $20 per point. The S&P pays 50 a point. The Dow pays 20 a point. So this initial pop only made it up to 21. That's 50 bucks. Then price pulled back to the BBC, bull bear cross. You see, just like I showed you on the daily, when price gets below that green line, bearish cross, we anticipate lower prices. When price crosses back above that green line, we're bullish, we anticipate higher prices. Now, this strategy, these indicators, we've not changed a thing in over 8 years. If it's not broke, we'll leave it alone. Now, this next move, remember, important prices, important areas are almost always tested. When price pulls down to the BBC, we expect it to be support. And when price pulls up to the BBC, we expect it to be resistance. So we've got a leg and a retracement, a leg and a retracement, and a leg. Buyers saw great value here at the low, at a weekly zone, came in, bid it up, hit resistance, couldn't get through on that first attempt, pulled back into the zone, made another run, and right here we closed above the BBC. Now you're probably wondering, well, why couldn't you just get in there? Well, you can. That's the purpose of teaching you the methodology and the strategy. See, when I put out an alert, it's kind of like chess. And I don't even play chess. I'm a checkers guy. I have to think 2 moves ahead. Because if I'm going to publish an alert, I've got to give you time to finish whatever you're doing. Get to your desk, get to your computer, bring up your charts, put on your thinking cap, put on your trading cap, look at the alert, look at the chart, because I want you to understand why it's an alert, why the entry is where it is, why the target is where it is, and I teach you where you need to put your stop loss based upon the structure of the market at the time of the trigger. So that's why the alert's way up here, when once you understand the methodology and the strategy, you could be entering here at 29,950. In other words, you'd have 50 points under your belt by the time we get to the trigger. 50 points in the Dow is $250 per contract traded. Now, up here at 170, or 3170, that's a 160 point move. 160 points at $5 a point, that's $800 per contract traded. If you've earned the right to trade 10 contracts, it's an $8,000 move. Again, the worst thing you could possibly do is rush out and trade real money before you learn either our strategy or somebody else's strategy. A lot of people just sit down at the computer every day and go, oh, okay, looks like prices going higher, so I'm going to buy. Or the classic is, well, based on my whatever, there's no way price is going to go any higher. Fatal last words. Don't ever let those words escape your lips. The market can stay liquid far longer than you or I. Just when you think it can't go any higher, it does. And when you think it can't go any lower, it can. Okay? You have to bring to the we give you all the knowledge and all the tools that you need to trade Emini Futures. What you have to bring to the table is something we can't give you, we can't sell you, and that is patience and self-discipline. Even though we teach you and provide you with the tools, if you cannot learn to be patient and exercise the self-discipline required to wait for the opportunity, the high probability, low risk opportunity, then you won't be able to succeed as a trader. Now, perhaps you already know that you struggle with this in other areas of your life. I'm pretty impatient. I don't have much self-discipline. Okay? It's good that you're aware of that, because now you can start to work on it. If you want to be the strong man on the beach, you gotta lift some weights, right? So you have to start practicing. Develop. It's like a muscle. The more you work it, the stronger it gets. Pretty soon, before you know it, you got the patience of Job, as they say. All right, let's go to the Russell. That's next on the list. Last night's alert on the Russell said to be long 1992. And 92 is right there. And again, why couldn't I get in here? You can, once you understand the strategy. I got to give everybody time to get to the table. So if you buy 1992, this initial swing high was 98. That's 6 points. The Russell pays $50 a point. That's $300 per contract traded. Important prices, important areas, almost always tested. Price gets back below the trigger. Off we go again. This time we hit a weekly zone up at 2007. And from 92 to 2007, that's 15 Russell points at $50 a point. Off the top of my head, I think that's $750 per contract traded. Let's see if I was right. By golly. Okay, next on the list is crude oil. Last night's alert on crude, in case you missed it earlier, consider being long, 47.40. 47.40. All right, from 47.40, Now, when crude oil moves $1 in price, in other words, when it goes from $47.40 up to $48.40, it's a $1 move in price. That's worth $1,000 per contract traded. So last night, all of our traders got the alert to be long 47.40 in crude. Since we've triggered, there has not been an exit signal. What's an exit signal? Okay, this little black line, it's called the step line. When you have a strong move to the upside, it will typically be on the left side of blue and climbing. When a move starts to run out of steam, price begins to walk sideways. So this step line, you see how it's crossed over from the left side to the right side? That's step one of the exit signal. What we're looking for, because this is a long trade, the first red candle that closes below the step line, that's the exit signal. So if you entered here and you saw that we had an incredibly bullish formation with the step line on the left side of blue and climbing, it's very possible you could still be in the move, okay? And we may not print an exit signal here. If buyers come in and keep pushing this thing, it'll keep rallying. Only if buyers stop buying. Oh, see, we got a flash of red. So we've got 17 minutes left in the life of this 30-minute candle. If this candle closes in 17 minutes below that step line, that's the price you want to exit the trade. Now, could you have gotten out here, or here, or here, or here? Absolutely. Remember, it's your business. You're in charge. You make the decisions. There's nobody looking over your shoulder, nobody telling you what to do. All we can do is offer guidance, instruction, and put the tools that you need at your disposal. That's what this is all about. The passport helps you to become possibly the 1 out of 10, because 9 out of 10 new traders fail. In 2006, Futures Magazine published an article. I wept, because I was just learning about futures. I knew about stocks and equities, but I was just learning about futures. And this article said 9 out of 10 new traders fail. I was a new trader, and I'm like, oh my, why? Why do 9 out of 10 fail? I read the article, I read it again, then I read it again, and guess what? They never said why. They just went on and on about the fact. So I set out on my own journey of discovery to try and find out why 9 out of 10. Because that's, you know what, Navy SEALs, 9 out of 10 don't fail. Brain surgeons, rocket scientists, astronauts, 9 out of 10 don't fail. Why so many? Well, here's the deal. If you're a Navy SEAL, you have an instructor. If you're going to be a brain surgeon, you have a teacher. If you're going to be an astronaut, there's somebody teaching you how. But in the world of trading, there's no license required, no qualifications. If you got the money to open an account, you can print up business cards that say trader. Now, it is in fact the low cost or the low barrier to entry. It's a contributing factor to why so many people fail. Because anybody with $3,000 to $5,000 can call themselves a trader. No license, no training, no qualifications, no nothing. If you want to sell real estate, you got to go to 40 hours of classes, take a test, actually pass the test, and then go find a broker that'll let you hang your shingle. With trading, anybody can jump right in. That's why 9 out of 10 fail. They don't have a teacher. If you have any hopes whatsoever of becoming the 1 out of 10, who goes on to become a consistently profitable trader. I can't promise you you're going to learn because I don't know what level of patience and self-discipline you have. But if you want to put yourself in the group who could become the 1 out of 10, you're going to have to find a teacher. It doesn't have to be us, but it has to be somebody who's not just selling you some indicators and a story. You got to find somebody that's actually going to invest in exchange for your fiat currency. You're going to have to find, I guess we could take Bitcoin. You're going to have to find someone who, in exchange for your money, is actually going to invest their time in helping you learn. Now, we do that through 2 hours of class every trading day, 9:30 a.m. to 11:30 a.m. Eastern. Then we break for 30 minutes, and then we come back and do 2 more hours, which is what we're doing right now. On top of that, our students have access to unlimited one-on-one mentoring. When you need help outside of the classroom, you go to our site, go to the page, pick a day and a time that works for you, you book a 45-minute session. Now, most brand new students will book at least 1 session a week with me, sometimes 2. As time progresses, it falls off to, once a week, once every other week, and then it's just whenever you need help. And there's an incredible amount of peace of mind that comes with knowing that when you hit a rough patch, not if, when, there's somebody there to help you make sense of it all, to help you pick yourself up, brush you off, get you back on the right track. Okay? All right, we got just a couple more real quick markets to cover. Last night's alert for gold was to be long 1891. Never got there. On the short side, 1863. Got there. $18.63 to a swing low of 61. It's $200 per contract traded. So what's happening with gold right now? Well, price got back above the BBC. We ran up to a zone, found resistance, pulled back. We're in the process of pulling back to the BBC. You see, when we hit blue and climbing, that was good for a bounce. Now we're coming down to the BBC. What do we expect to happen there? We expect it to hold. The pullback holds more often than it doesn't. Once we touch this green line, if it holds, then a high probability move is back up to this swing high. That creates what we call a window of opportunity. Yeah, but what if it doesn't hold? Yeah, then what? Great question. You got a window of opportunity to the downside. So whatever the market does, as long as it doesn't go sideways, Burr Fox, whatever you do, don't throw me into a sideways market. You see here? This is how most traders lose their money, right here. A sideways stagnant market. Gotta have the discipline and the patience to wait for this, not this. You got to be able to know the difference. Our indicators do a great job of not only getting you into high probability, low risk trades, they do a fantastic job of keeping you out of this. Okay? Okay. And let's see. We got one last market. Silver. Hi-ho. And silver's done a whole lot of sideways. I don't think we even have anything to address. 26.90 on the long side, 25.05 on the short side. No trigger on silver. Okay, a $1 move in silver, by the way, with the full-size contract, that's worth $5,000 per contract traded. Okay, let's go now to our good word for the day. Yesterday we talked about being generous with God. Today, I'll pose a question. Are you alone this Christmas? Psalm 34:18. The Lord is close to the brokenhearted. When you find yourself alone at Christmas, the sights and sounds that should bring joy can reinforce your sense of sadness and loss. There's no magic, get-well-quick formula. Processing what you're missing takes time and God's sustaining grace. But here are a couple of insights to help. Number one, don't assume, because that makes an ass out of you and me, but you know that. Don't buy into the myth that everybody else is having a perfect Christmas while you struggle. You know, you got friends, you got family members, they send you these Christmas cards. It's the new in thing where the group picture, the whole family, and everybody is smiling and looks perfect, right? And you know that inside your own home, sometimes things are a little broken and it's not perfect. Guess what? Those people are posers. They posed for a photograph. It was airbrushed to help them look perfect. There's very few perfect people in the world. I only know of one. He came, saw what a mess it was, saved us, and left. But he did send the Comforter to help us get through. Don't assume, don't buy into the myth that everybody else is having this perfectly wonderful white Christmas while you struggle. The truth of the matter is that we all experience the unrealistic demands and pressures of shopping, entertaining, and gift giving. And it's worse in times of heartache. That's why we're so relieved when it's over. Number two, it's just one day out of 365. You can handle it for 24 hours because God has promised to give you strength equal to your days. It's Deuteronomy 33:25. Number three, take the focus off yourself for a change. Reach out. See if there's a needy family or a hurting acquaintance who'd enjoy spending an hour with you. It'll probably be the last thing you feel like doing, but it's therapeutic. It helps to restore your perspective and brings a sense of well-being and gratitude. Number four, start some new traditions, especially when old ones just make you feel worse. Philippians 3:13 says, forgetting those things which are behind and reaching forward to those things which are ahead. If you're feeling lonely, here's a prayer for you. Lord, you know my heart aches today. Your word says you are close to the brokenhearted. God, I need to feel your nearness become more real to me than the activity without and the emptiness within. Help me draw close to you, and in so doing, make this Christmas like none I've ever known. And that's our good word for the day. I will be here tomorrow. Now, the markets are open, half day, full day, I forget, but gallery's off, Michael's off. There will be no official live training room, no official radio show tomorrow. There's going to be a hybrid. I'm going to pop in at some time and do a mishmash of pre-market strategy session / live training room / daily radio show. I will post in the discussion group what time I'm going to show up, and I invite each and every one of you to join me. If I don't see you or speak with you in the real world or online between now and Friday, I pray that you and your family will have the best, the finest, the happiest Merry Christmas you've ever known. Thanks so much for joining in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.